Hi, I'm Peter Rose, founder of Longwood Currency Trading. Be aware of the news, but don't trade it. I think some of my comments in previous videos have been misinterpreted by folks. I'm adamantly opposed for us as retail traders to look at news events, whether those are some country's president got diarrhea, or the interest rates went down, or I don't know, whatever the news is. War breaks out on the Western Front, or whatever's going on. Whatever that news is that affects interest rate policy, affects consumer purchasing, affects international commerce, anything like that is news, which is everything. You can't take a specific instance of that news and go, oh, this is going to affect the currency market in this particular way. It may very well do that, but because the currency market is a zero-sum game, you have to take into account the time lag that it takes for the people that are currently there being wrong to be wrong, and the people that are right to run their orders out through the order flow cycle that the clients are demanding of them. I'm talking about the large institutional traders. In order for all that stuff to get through the system, and then they'll go, oh, you know, in the long term, this should happen, and I'm going to need to expect to pay 42 cents a kiloton for my stuff, and I have to accept that, and so my inflationary pressure on my business rises because I have to pay more for my goods, and I accept that, so I go into the exchange market, the interbank market, in order to conduct international business with my products. But as retail traders, we can't trade those events. We don't have the resources to evaluate the news on a global macroscopic basis. Now, you may think you can. You may think that by watching Bob and Dick's Roadshow on video that you're going to understand world economics and be able to make trading decisions on a 1-hour chart or a daily chart based on that. You're not. However, you have to be aware of the news. Now, it's going to be very difficult for you to read a bunch of pieces that are talking about, for example, the stuff that we're going through right now in the United States and throughout the country with a rising inflation and the rising interest rates to calm that inflation. And now inflation is going down, and they're saying, well, maybe we don't have to raise interest rates anymore. They're stable, they're whatever. You can get involved in all that horse shit and form an opinion and start trading on that, and you're going to be cooked. I know that for a fact. I'm a pretty bright guy. I get caught with that because I enjoy the economics of this market, and I enjoy economic news. Look, I've been studying the financial markets and looking at them since the early 1970s. I've done stocks. I did 4 years of stock options trading. I've subscribed to the Wall Street Journal and Barron's, and I still subscribe to Forbes and Businessweek. I mean, it's interesting stuff. And you can use that in your stock trading. You might even be able to use that and directly apply it into your futures trading. When you're looking at, you just say you're trading wheat or corn or pork bellies or something, or sugar, you're able to look at the news and say, well, I'm really thinking that it's going to be a really dry season, so therefore prices of wheat's going to, you know, do this. But not in currencies. I can't explain all of that in 15 words or less in a video. But you can't do that in currencies because the currency market is different. And so you have to take into consideration the market that you're trading if you're going to be interested in economics and global news and all that other stuff. You need to be aware of it. You can't just sit there in a vacuum and trade price action. I don't believe that. I'm a price action trader, and I'm telling you that. You have to be aware of technical analysis. You have to be aware of fundamental analysis. You have to be aware of what the current news is and what ramifications that's going to have on a global scale as well as perhaps on a local scale. You have to be aware of psychology. What are people going to do in their response? And how long will it take them to do that? And in what proportion are they going to do whatever it is that you think they're going to do in response to this particular release in the news. The other day we had a producer price index release of information. I didn't think it was going to be a really big deal, and I don't know, somebody else thought it would be, and man, we had 80 pip price move on some of the majors in 15 minutes. That's pretty good when the daily ATR might be 80 to 120 pips, and you're going to throw a 5-minute 80 pip bar. That's pretty dramatic. 40 pips of that was recovered almost immediately, and then it chattered into just a regular exponentially decaying waves on on both sides of the price until the normal time for those markets to calm down. If you're trading U.S. and European markets, you're in the middle of the afternoon, and those markets are pretty flat until the Asian session opens up. But dramatic moves that then came back to a normalcy. You might say there would be a regression to mean price action, not necessarily to a moving average, but still some normalcy. What is that? Well, you'd have to be aware of the economic conditions in the news in the two-pair countries in order to determine what normalcy is, and it's a lot more distributed than you can over on the 200 period moving average. You have to look at historical information in order to understand what the people are like and what their frustrations are. You look at the difference in the reaction to interest rate policy between the U.S. and England, for example, at this particular time. And we have quite an amazing disparity in what the central banks are going to do and going to be able to do in relationship to the general feelings of the people. Well, where do you get that kind of information? You study the news and you look at what's going on, you go, oh wow, there's going to be some differences here. The problem is that you can't make any opinions based on that. We had some news released today. Today's mid-December of 2023. And didn't expect price to really do anything. And when I got to the trading desk this morning, boom, it was off and crazy and all kinds of stuff going on. I didn't understand it. I wasn't going to apply any of my opinions to that. So I went out and grabbed another load of wood. They had to do that yesterday. I grabbed another couple of loads of wood and brought those in for the wood stove, fixed myself a coffee, and and that was it. I'm not going to trade. I'm not going to trade during all that because I don't understand why the market did that. And even if I did understand why the market did that, I wouldn't do anything. That's what happened yesterday. I got up at the trading period. There were again some economic release. I'm looking at the price action. It doesn't make sense to me. I'm not going to try to figure this out because I don't figure stuff like that out. I've already done that in the rules that I have, and they have very specific conditions that say if this is good and this is good and this is good, then you take a trade. But if any one of those conditions is not good, I don't take a trade. And none of the conditions were good, so I'm not going to take a trade. I went and did other things. It wasn't until 4 hours later from the early morning from New York open, 7:30 in the morning, before 4 hours later, that I began to see an anomaly in price that it hadn't been doing previously. I thought, isn't that interesting? Condition number one is met. Condition number two looks pretty good. What's going on here? I don't want to go in and take a trade right then because that would be what's called an anticipatory trade. I've got to have proof that it's going to happen. Now, because price had been moving after this economic was in small ATR movements consistent with normal ATR with no particular directional bias going on, and now all of a sudden we've got a 2 ATR move at a 5-minute candle, and I'm going, isn't that interesting? why would this thing move to ATR and it hasn't moved to ATR in hours? And even before the announcements, it had been very stagnant. And then all of a sudden you get this rise, and then we just chatter along for 3 or 4 hours, and there's no divergence from ATR. And yet here we go. What does that mean? What do my rules tell me that I should do in anticipation that price may, from a probabilistic sense, continue in that direction? Then I have to go to my momentum view of the market, which is the next part of the rules. And I go, if price gets to here, it probably has the juice to get to here, which isn't very far away, which means I have a decision to make. I either go all in right at the take point, or I stagger as many as I can get in a 3-5 pip period of time, so that I can pick up at least 5 pips on the reasonable 10 pip profit target that I had. And so I'm looking at this thing, and while I'm thinking about it, all of about 40 seconds, this thing ticked close, very close to that take point. Okay, boom, I go put a 3 lot in. It doesn't react the way that I thought that it would. It didn't continue. It floated back up, went 2 or 3 pips against me. Then it comes down, it's a pip in my favor. Then it's back to 2 pips against me. Then it's back to break even. Then it's back to 3 pips against me. Then it's back to break even. Then it's up to 5 pips and 8 pips against me. And then it's back to, so there's something going on here. I just happen to be early in my trade. So I'm thinking that because there's been none of this anomaly prior to that, and I'm looking at the historical prices over the last couple hours, I'm feeling pretty good. Price comes down from where it was negatively against me. It goes through my original take point. I bang it for 3 more lots. It continues on, and I bang it for 3 more lots. And it continues on. I bang it for 3 more lots. I got all I can eat with that. I'm out with a little less than $1,200 profit in about 15 minutes or something like that, 10 minutes. But I'm doing that based on price action and my, not so much skill at trading, but simply the rules that I've developed, which come out of mathematical proofs, and it's just intuitive looking at what the solution set for the Forex market as a whole is. I'm doing some writing now. I have someone who's I'm working with, and they need some of the consulting that I'm doing in written form so they can keep going over it. I need that too. And the writing down is very good for me because it commits thoughts to paper, and then I can see them statically as opposed to having them floating around in my head, right? I want to rely on trading and not on what's going on in the news, what the Bollinger Band or the Fibs or any of that shit's talking about. I'm a trader. I'm not abdicating what I do to some stupid signal service or what some quack is barking off on on his channel as to what he's doing. Oh, I'm just going to set this order here, and when price will go through it, and blah, 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 and I'll make $4,000. Oh, okay, great. Slick, you're trading at 200 to 1, and anybody else who's doing that without the skill that you have is going to get wiped out. So good luck to everybody who's watching that. One of the first things that I work with students is what's reasonable to expect. If you're reading the news, you're expecting something to result from that news if you're not careful. You have to read the news like you would listen to music in the background. You're not listening for the words. You're not listening to say, oh, this is a syncopated B flat. You're listening to the music. It's in the background. And you're doing other things consciously here. That's almost a subconscious process, is the music in the background. And the muse has to be that same thing. It's music in the background. Don't trade with it, but be aware of it. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.